Good evening, dear students. I'm glad to see you. So I hope you can hear me. Just arrange my microphone. This should be alright. Please let me know if you can hear me clearly. If it's loudly, I will fix it. So, should be okay. So we have 3 students only for today. Yeah, I hope the rest of students will join later. So that's strange. Why is 3 only? Actually, should be more than it. Yeah, thanks. Okay, I think we have to start already. So I have 5 students now. That's okay. So we have a last chapter for finance for today. We are going to finish it first. Then we continue with exam question explanation. Okay? So here is the last chapter 8 is about the decision making on the condition of risk and uncertainty. So let's see. This is all about the project, how we can, what we can do to make a right decision. So topic and structure of the lessons today is we study about the conservative approach, the 3-point estimate, the minimax and maximum criteria, about the sensitivity analysis, maybe you heard about that, capital asset pricing model, or we call it CAPM, and about the probability. So we will study about the most important things for today. To learn outcomes, you should be able to make decisions on the condition of uncertainty and about the assessing risk. So let's see. Here is a good term you must be able to use. That one, cash flow adjustment, maximum, minimax criteria, about the effect of sensitivity, about the probability, expected value, and so on. So what is actually the conservative approach? This is where the cash flow adjusted by giving a percentage, and the outflow will be increased and inflow will be reduced. The crude measure of assessing risk and its percentage used in arbitrarily. The conservative approach, let's see in another explanation. Actually, in the conservative approach, we have 3 kinds of point estimates. So in any kind of projects, we can do the decision based on these 3-point estimates. For example, the project could be the most likely, the project can be the best possible, and the worst possible. This we talk about the outcomes, about the profits. So we can say that the profits most likely, that I mean, you like that the profits has increased value compared to others, and best possible. That means the project could, whereas the profit could be best possible for day to day, and worst possible, that you could understand that the project with the worst profit by today. So here is. So let's see what is the worst possible, what is the best possible, and the most likely. In this kind of conservative approach, we use the criteria which is called minimax and maximum. What is likely? Let's see. This is a conservative approach in the sense that the least worst possible outcome that could possibly occur in select. This is very easy. Let's see. Here is we have some project. The minimax applies to cost. Here is what's the minimax? This minimax it's criteria, and we apply to cost, to our cost, to our expenses. Okay. Here is, if you can see, Just a moment, I want to show you. Here we have three kinds of projects: X, Y, and Z. Okay, and the possible cost of outcome. The cost here is when we say the possible cost of outcome, the cost, or we can say the investment money. Okay, so for project X, it could be 80. Here's, as you can see, $80. The variant B is 70 or 95. In the project Y, you can see the possible costs can be 90, 75, or 80. And respectively, the project Z with the cost could be the 187 or 78. This is the three kind of variants. We can say three kind of types of the possible cost of those projects. And let's see, Minimax. If you can see, the Minimax box here is given to you. What the Minimax? What's the here is, as you can see, the worst possible cost for projects X. Worst possible, that means it takes more money or cash flow from the company. If you can see, we can see that the project C has the most the large cost compared to A and B. As you can see, 95. So we put it 95. That is the worst possible outcome. That means worst possible cost in this kind of project. In the project Y, you can see. So here is the most is 90 for project A, right? We put on the 90, and the project Z, here is the worst possible cost is like 100, right? We should select the highest amount in the possible cost. As you can see, in the project Z is 100, right? It's a variant A. So we put as a variant A. So first, when we have a few different projects, we must identify the possible cost for those projects, the investments. How much money we can invest to those projects. From those, the cost, we should select the highest one, the highest cost. Okay, as you can see in the Minimax box, we already choose the highest box from three projects, right? And then we have to select the lowest cost from the Minimax box. As you can see, it's a project Y, which is a 90. 90 is the least possible outcome. Least possible outcome. That means in three kinds of project X, Y, Z, the project Y has the lowest cost compared to X and Z. Is $90, right? So this is you have to just use your logical mind to identify first the possible cost that could be in the project, and which is the worst first, which is takes more money from the company, and then from those outcomes you have to select the least possible outcome, the lowest outcome from those projects. I mean those, that means X, Y, and Z. Okay, so any questions so far about Minimax about the Minimax approach? So the Minimax approach will apply only for costs for our investments. Okay, when we do investment in the projects. If not, we can move to the next one. So, do you understand what is the Minimax approach? Why we do apply it? This is conservative approach. we use only for costs for investments projects, okay? So first we have to identify the possible cost for that project, which is the possible could be. And from that, select the highest cost that could be. And from the highest, when we have a few different projects, from the Minimax box, we have to select the lowest cost for that project. Yeah, that the Minimax is the least possible outcome. That's right. So let's move to the next one. Let's see what is the maximum. So maximum is vice versa different. It's applied to profit. Before we have applied for the cost for our investment money when the cash outflow. That means cash goes out from the company, from the accounting. What about the maximum? The maximum we apply to the profit, the cash inflow when the money comes to the company. So here is we have to select the best possible outcome. So first, if you can see, we have three kinds of projects: X, Y, and Z, and the possible profit from those projects. As you can see, yes, it's the opposite of Minimax. So here is the possible profit for the project X can be $80, $70, or $95. For the project Y could be 90, 75, or 80, as you can see. And the project Z, the possible profit can be 187, 78, right? And from this kind of possible profits of the project, we have to select the lowest profit. As you can see in the Minimax box, you can see we do selected the lowest profit from the project X. It's what is it? Project is 70, right? The type B has the lowest profit for the project X. In the project Y, is the lowest amount is, as you can see, is 75. Yes. And the project that is 78 is the variant C, is the lowest profit. So right now, when we already identify the lowest profit from the projects that could be, then from the maximum box we have to select the highest profit that projects brings to the company. As you can see, we have a 70, 75, and 78, right? So which is the highest profit from these three kind of projects? It's 78, right? Some of you already given me answer. It's also, yes, that's right. It's 78. This is the best profit that the project can bring to the company, right? The highest profit from the maximum box. The best possible outcome. We can call it the best possible outcome. So now you know what is the minimax and maximum. This is it's not so difficult. Just to have to select the worst possible cost and the best possible outcome, which is best possible profit from the project. This conservative approach we apply when we have, for example, a few different kinds of projects with the different possible outcomes or the investments or costs we call. Okay. And this kind of conservative approach, you can't just use it only and make a decision. This is like another method of the decision making, which you can use in your decisions. Okay, let's see the next one. So this is another possible profits. Here is another given to you example. This is a regret table called regret table. Maximize the minimum regret. That means here is first we have same three projects, right? As you can see, X, Y, and Z with different kind of possible profits, with different outcomes. So first we should identify the highest one. Before we use the lowest one, this is a different things, which is called the regret table. So first we have to identify highest one. In the project X, it's 20, right? We put on the maximum box 20. In the project Y, as you can see, the highest one is the 15 outcome, the profit one. And in the project Z is 17. So we already identify our maximum box with the highest profits. Then we have to identify the lowest profit from those projects. As you can see, in the maximum box, the lowest profit, it's a project Y with the project Y with the profit $15, right? Okay. So we call it regret table. When we select first the highest profit from the project, and then we select the lowest profit after those outcomes. This is the opposite things to the before the possible profits of the outcomes. Okay, let's back. As you can see, in the maximum we apply it to the profit, right? Here is we use the first we have select the lowest profit, then we select the highest one. In this regret table, we go in different way. In the opposite way. We select the highest profit from the project, we put on the maximum box, and then we have to select the lowest profit from those projects, from three kinds of projects. Okay. So that means that regret table. That means that we maximize our minimum profits, which is 15. Okay. This is another way how you can make a decision under your projects. No, we don't have a minimax for the regret table. Some of you ask me about, do we have a regret table for minimax? We don't have them, because in the minimax it's all about the cost. When we talk about our cost, our investments, we should use only one way that I have shown you already. Okay, let's see the next one. So what about the limitation of the minimax and maximum criteria? Okay, they are too conservative, right? As a project which is slightly risky yet reasonably profitable may be rejected out of hand, and they ignore the use of probabilities, and they ignore the alternative for not selecting any project. So first, they are really very conservative. So in this kind of situation, we can reject maybe the very good project. Let's see the next one. As you know, we talk about our risk, about the investments, and we can we have a topic about the investors, or about the risk-seeking investors, about the risk aversion. So what is the risk aversion? It's defined as a degree to which investors are willing to commit fast to investments, right? In the risk investors, we have three types of investors. The first, as you can see, we call it the risk-seeking investor. Who is the risk-seeking investors? That the investors who like to accept the risk. They like to purchase investment of high risk for a relatively small increase in returns, and they are said to be aggressive type. So risk-seeking investors who accept the risk, they are aggressive type. Okay. We have another type which called the risk-indifferent investors. The investors that would be successful if they will get their capital back from investment. They are said to be of the moderate type. The moderate type, the investors who want to back their investments, at least their investments. And another type is the risk-averse investors. The investors that require an additional return for an additional increase in risk. Here they are said to be of the conservative type. Okay. So this is the three type of investors we have when we do any decision on the project. You can't find yourself if you do any decision making on the project. You are a risk-seeking investor, or you are risk-indifferent investor, or maybe you are just risk-averse. You are a conservative type. Someone asks me who is the better one. I can say who is the better one, because we have because those investors, when they do any decision on the project, they have a certain decision, different projects, right? In some of, for example, in some of situations, you can be the risk-seeking investor, aggressive type. In another kind of project or another kind of, let's say, the field of the market, you can be moderate type. This depends on you. You can identify yourself who you are. You are aggressive type, seeking investor, or you are moderate type. You want to back your investment at least, or you are conservative type, which is you want to some additional returns on your investments. Of course, most of us, I think, is maybe conservative type, if I'm not mistaken. We always like to return some additional profit from the additional risk. Yes, right? So let's see the next one. So we have the definition like calls the capital asset pricing model. This is the capital asset pricing model we use when we do also the decision under any project. So this what is actually the use of capital asset pricing model include what is include the establish what they call equilibrium market value of company shares. Establish the cost of company's equity, taking into account the risk characteristics of company's investments, both business and financial risk. So we use the capital asset pricing model to identify the price of our assets. So let's see how we can use that model. This is this is special model. We have a formula I will show you later. When we would like to identify the price to our company, to our shares. Okay, let's see the next one. We have two types of risk. As you can see, this is systematic risk, the market risk. They are cannot be diversified and must be accessed by the shareholders. And we have unsystematic risk or business risk, can be diversified. Okay, what is business risk or unsystematic risk? The business which can be diversified. Business risk which is can be occurred in your business, in your company. That risk which you can control, which you can diversify, it means you can, let's say, to minimize your costs. What about the market risk, the systematic risk? This risk is uncontrolled by the company because it occurs in the markets, in the international market overall. For example, as a financial crisis, when you can't control it, it could be any time. Let's say it also won't depend on you. And this kind of risk we cannot diversify. And the shareholders, which is the investor, they have to accept it. Most of you know that when we have a financial crisis in the 2007, right? In the end of September 2007, we have a financial crisis, in the international financial crisis. Most of companies and banks have become bankrupt. And this is the risk, this called market risk, systematic risk, which you can't control, and which you cannot diversify those risks. Let's see the next one. So, what about the KPM model, about the capital price model? So here is given to you the formula how we can use how we can get the price to your shares. As you can see, the formula here is RS equal to RF plus B and RM minus RF. What is the RS? Is expected return from individual securities. Individual security is the shares. RF is the risk-free rate of return. And the B, beta of individual security. The beta, which is the risk of the individual security. And RM is the return from the market as a whole, the average market returns. Let's see here, we have some practical exercises, how we can use this formula to get a price for our shares. Here is the question 1. The company X and company Y both pay an annual cash return to the shareholders of 34.88% per share, and this is expected to continue in perpetuity. The risk-free rate of return is 8%, and the current average market rate of returns is 12%. The company XB coefficient is 1.8, and the company Y's coefficient is 0.8. So what is a B? B is the individual risk of the company. This kind of risk the company will identify by the markets. And here is the sign. What is the expected return from the companies X and Y respectively? So if you use the previous formula, we can find it. Here is given to you solution. So the formula you remember. Here is given to you. This one show you. This is the formula to the expected returns. So we know that our free rate of return based on the exercise is 8%, right? Our beta of individual security is 1.8. And our average market rate is 12%. If we use these figures and imply to the formulas, we can get that our expected return from the company X is 15.2%. That means that the company X brings return to shareholders in 15.2% of the profit. Okay? That means the company brings profit to the shareholders from their shares, from the investments. Okay? So any questions so far for the exercise number 1? No question, right? So you are all quiet today. Do you understand today's chapter about the decision making under uncertainty? Do you understand what is minimax and maximum criteria? What is a CPM? CPM is when we would like to identify the price to our shares of the companies. So, and based here is on the formula. We can identify our price when we know our free rate of returns is 8%. When we know the returns market, the average market returns, which is 12%. And the beta of individual security, we identify based on the field of the companies. If you won't have this kind of exercise in your exam, don't worry, because it's most of we use the previous methods that we have been used. This kind of method we use when we like to get our price to shares. So no any questions so far, we can move to the next exercise. So here is just a moment. Okay. For the next one, first we identify the expected return from the company X, and next one we identify we use the same formula to identify the expected return from the company Y. As you can see, the free rate remains same 8%, but the beta of individual security will be different, 0.8. And the return rates from the market is same as the 12%, as you can see. And then we have got our returns, expected returns, which is 11.2% for the company Y. That means the company Y brings to the shareholders 11% of the profits from the investments. Okay? So let's see. The next one, we have another one. Exercise the question B. The risk-free rate of this is another difference. We use the same method to identify our expected returns. Here is this question B. Question 2. Sorry, question 2 is another different company, but with a different free of returns, which is 7%. And the average mark is 11%. And the B factor is 0.9. So you have to, what is the expected return? You have to identify the expected returns. Use the same formula. Some of you asked me to go back on the previous slide. So here is for company Y, we must identify expected returns. The free rate of the returns is 8%, same in the previous one, remains same. The average market return is 12%, but the beta is different one, is 0.8. When you use the formula, we put the figures implied on the formulas, and we can get answer which is 11.2% is the expected returns, which is the expected profits from the company Y. Okay. So next one, the question B is the different company with a different free of returns, which is 7%, and the market return is 11%. We know our beta, the B factor of the individual security, which is 0.9. Okay. Let's see the solution one. When we use this same formula, we apply those the free return, the beta, the market ratio of returns. We apply those figures to our formula, and we can see that we have got the answer 10.6%. This is expected return from the shares. Okay, expected return, that means the expected profit from the shares, and we can call it the price of the shares when we would like to get our price from of the shares. But this is in the percentage. If you know amount of your price, you can just multiply and get your price for the shares. Okay, that's all. This is the topic about decision making, and then uncertainty is short. So in this topic, you must remember CAPM model. The formula here is first, and another one about the maximum in minimax criteria. That's all. About the conservative approach and about the CAPM model when we would like to identify price for our shares. This is the most important things in this chapter. Okay? So that's all. Any questions so far based on this chapter? Any question? Do you understand what we talk about actually? We talk about another method of decision making under conservative approach. When we use the minimax and maximum criteria, when we select the worst possible outcome and best possible outcomes, when we apply it to profits or costs. And next one, we learn about the CAPM model when we would like to identify the price to our shares. So that's all for the chapter. So I think you're all right with this chapter. If no any question, we can move to our exam questions. Okay. Okay, here is the exam question. You remember I have sent you this file, which is here is given to you the topics that here is, as you can see, all the topics that we studied on the finance classes. And based on these topics, we have some theory and practice questions. Okay. I want to give you some little, let's say, the help, how you can, what you should learn more. Okay? Here is first one. You can do notes, what I am talking right now, okay? You can do notes based on the chapters. First, let's see. Here is, first, the accounting concepts and conversions. About this chapter, you have theory questions. You have theory questions, okay? That means you must remind what concepts you have in accounting. What is separate entity, going concern, monetary, accounting period, the principle of historical cost, the principle of income recognition, matching, and the principle of full disclosure. So please remind all these concepts about, you have to remind the definition of these concepts, okay? And in this accounting, in this chapter, based on this chapter, you will have 3 theory questions. So you can, right now you can do notes. You will have 3 theory questions based on the accounting concepts. Okay? I already made some notes. After class, we'll send you. Okay? Next one. The most important will be the double entry and trial balance. You remember we know how to prepare the trial balance. From this chapter, you must concern about the trial balance. You will have some theory questions, like what accounts will include the trial balance, something like this. You will have just one. I want to see. On the trial balance, you have 2 questions, two theory questions. Okay. Next one, let's see. The next important chapter is chapter 2, the measuring and reporting financial position. In this chapter, we have studied about the balance sheet, formats. Okay. And based on this chapter, you have 3 questions, 3 theory questions, 3 theory questions, and yes, just a moment. Yes, 3 theory questions. You remember balance sheet? We talk about what kind of assets we have, fixed assets. You remember all about it. We already had some exercises how to prepare the balance sheet. You would have like same questions that we had already on the exercises. Next one is the chapter 3, the measuring and reporting the financial performance. Here is the most important is about the depreciation, the profit measure and the calculation of depreciation. So under depreciation methods, you have two practical exercise. You must review the formula that we use in the depreciation methods. You will have two practical exercises. Okay? Yes, two practical exercise based on depreciation methods. Okay, let's move to the next one. That one. Accounting for limited companies. No, here is no any questions. Okay, next one. The most important is the ratio and interpretation of accounts. The ratio analysis. So here is on the horizontal analysis, trend analysis, and vertical analysis. You will have by the practical question. For horizontal analysis, one question, practical exercise. For trend analysis, another one, and the vertical analysis also respectively one practical exercise. What about the ratio analysis? You remember we have different ratios. On the ratio analysis, you will have around 4 practical exercises. Ratio analysis, 4 practical exercises. Okay. You don't panic about that. 4 is not so more because we have around 12 kind of ratios, and you have, for example, one income statement and one balance sheet of the company. And based on this income statement balance sheet, you have you must to identify 3 or 4 ratios, and we'll give you what kind of ratio you should to identify. And you have to correctly imply your formulas. Okay. So, any questions so far? We're going to move just one. So, on the ratio analysis, based on the ratio, you have 4 practical exercises. Okay? Just get your formulas, prepare your formulas. As I remember, I sent you the list of the ratio formulas. Yes, you have it. Okay, just a moment. Wanna see what I have else. So next one, we have a chapter performance evaluation, behavioral consideration, and the management account and decision making. So based on these, you have one practical exercise. Okay, based on the chapter performance evaluation, you will have one practical exercise. Here is one practical exercise. Only one. Only one. Next one. The last one. Oh, okay, sorry. I forgot about the capital expenditure decisions. This is very important. You will have you have one practical exercises based on the capital expenditure decisions, and in this practical exercise you have 4 assignments. You must to get your payback method, the payback period, accounting rate of returns, the NPV, and the internal rate of return. The exercise will be same as we have done the previously. You remember that we had a box with the projects, and where we found the different kinds of projects, and where did we find the all these payback the methods, the MPVs, the IRRs, the ARRs will be slightly same as we have done already for the capital expenditure decisions. Okay. And as I told you, the performance evaluation, you have only one practical exercise. And for the last chapter about the decision making under condition of risk uncertainty, which we have for today. So you have two practical exercises. One is for minimax and maximum criteria, where you have a same slightly same boxes that we have in the chapter. You have to identify minimax for that project and maximum criteria for the project. And next one, you have some exercise for the capital asset pricing model, as we have previously. So you don't worry, all the exercise will be slightly very, how to say, same as we had already. Okay. Like we have already. It's not so more, as you can see. So I think that's all. So I already told you what question you would have on the theory and the practical. Okay? So some of you say it's me difficult. It's not difficult. No, don't worry about it. You see, the theory questions will be very simple. Why? Because you have all your presentation, all materials on the finance. You just check and review it again, and you'll find all your answers. If you study about, actually, if you didn't study, if you didn't review any kind of presentation, of course it would be difficult for you. What about the exercises? Same with the exercise. The methods of the exercise will be same as we have in previously, but the different number figures maybe a little slightly different about the assignments. Okay, but all the methodology will be same as we had already. So that's all, I think so. Because you have to know it, how you can make decision on the project, you should be able to prepare the income statement, the balance sheet, as we did already. Okay, so I think that's all. So one more thing I want to explain you about the process of the exam. Just a moment. So about the process, if you already got my emails, just a moment. I wanna see it again. Okay, I send you some information on the finance exam. So on the next Friday, you will have exam. So that means we have a session, same session as we have today, but it starts at 7 o'clock. Okay. So in that time, I will send you on your emails all the assignments that we will have, and then we'll give you around half hour, the 20-30 minutes, to explain the assignments itself, how you should make solutions, how you can do it, what you should use. Okay, we'll give you explanation, and then we end the session. And after that, you have to make your solutions and send me to my email. before the next day, by the 6 p.m. So that means you have 1 day to make your assignments. Okay, you have 1 day. That is around 24 hours. I think that's time enough for you to get your assignment, to get your answers and the solutions on the exercises. Okay. So I think, yeah, that's all what I want to say. Okay, some of you asked me about this table. This table I already sent you on the previous Friday. This is the exam question based on the finance topics. You have already this file. You have already this file. I can send you again if you want. And of course, right now we talk about how many practical theory questions you have on each chapters. I already prepared this file, and we'll send you also after classes. Okay, I'm going to send you. And under what you have to concerns about. Okay. And all information you have already, all your materials, all your presentations on the slides, on the chapters, all the practical exercises with the solution you have already. So just review it again. So I think, yeah, that's all what I want to say. Any questions so far based on the exam? Actually, I think this is a second or third additional classes. So we can finish today earlier if you want to. If you have some additional questions based on the exam, just let me know. So I can repeat again, okay? So I want to repeat to you again about the exam assignments. First, based on the accounting concept and conventions, you have 3 theory questions about the concepts. You must know the definition about the concepts. Okay, next one, the trial balance. On the trial balance, you have 2 questions, 2 theory questions. Next one, about the measuring and reporting financial reports based on the balance sheet. Based on the balance sheet, you have you have 3 questions, sorry. You have 3 questions. Next one, about the calculation of depreciation. Based on the depreciation methods, you have 2 practical exercises based on the 2 methods that we have in the depreciation. Okay. Next one, based on the ratios, and as different analysis, you have for horizontal analysis 1 practical exercise, for trend analysis 1 practical exercise, for vertical 1 practical exercise, and for the ratio analysis you have you have 1 exercise with 4 assignments. That means you have 4 practical exercises. That means you have to identify 4 kinds of ratios. Okay. Next one is the capital expenditure decisions. You have 1 practical exercise with 4 assignments where you should get your payback period, account rate of return, then NPV, and the internal rate of return. Okay. Next one, based on the performance evaluation, you have, as I told you, 1 practical exercise. It can be return on investment or residual income or economic value added. I won't tell you right now for which of these methods would be the exercise, but you have to review the formulas. And last one, you have for the decision making under condition of risk and uncertainty, you have one practical exercise for minimax and maximum criteria, and another practical exercise for capital asset pricing model. The exercises will be same as we had today for the under the chapter 8. Okay, so that's all. You see, it's very. If I have seen, it's not so difficult. If you do review every chapter again. So that's all. So thanks. Okay, some of you have, sorry, some of you asked me some questions. No. Okay. Some of you asked me to give you 2 days. I cannot give you 2 days because as I can see, the 1 day is enough to make the solution on the exam. Because actually, first time I was thinking to give you 2 hours only to get your solution on the assignments. Because in my MBA study, I had 2 hours on the. Actually, the exam was in the auditory with the 2 lecture. They ask the students to switch off our what about them? The phones, everything. We didn't have any materials on the exams. Just only one paper with the pencil one. That's all. I think we should be able to use our calculator only. That's all. And they give it same as I told you, the same around, as I remember, 15, 20 questions based on the finance with the practical and theory questions. And we had 2 hours only to make a solutions on the assignments. But as you are online students, I'm giving you 1 day, and I think, in my opinion, that should be enough for you. And someone asked me, if you are fail in the first chance, what will be next one? Let's do first one. I don't think so. You will fail because all the questions, all the answers you have already in your chapters. Same with the exercises. The process methodology will be same. You just use you must be able to use different figures and apply with the formulas correctly. So what about the who will fail? We will decide later. So what else? Just a moment. Some of you asked me the send you and the finance, all the presentations. But after every classes I did it, I sent all the materials to all students. To all students that I have emails that the WebEx administration sent me. So who didn't get any presentation, just let me know, because I can't identify who didn't receive my slides. And also, actually, I have sent all presentation on the WebS students mail. If you have if you have the allowance to go on the WebS students, you can find there. So, okay, some of you asked me to send all the chapters on the one email. I tried for today if my mailbox would allow me to send all the chapters by one mail, okay? And about some of you asked me how many questions you would have. As I told you, you would have around 15, 20 questions, which is include the theory question and the practical too. Okay? So that's all. Later you will receive the files with the questions, what kind of question you would have on the exam, not the exam assignments itself. On the just on only the notes on the exam assignments, and we'll try to send you all the jobs in one mail. Okay. So I think that's all what I want to say. If you any questions so far? Just want to send you my if you don't have my email, I can email you right now. I think you should have every. I can post my email on the Facebook also. And I want to just tell you that after exam, when you already would send me your solutions, when I do some assessment, and I will send you the results based on the exam. And I think maybe we'll take one session to have a discussion on your results. Okay, I think that should be all right with if I arrange with the VVS administration. So I think we must have some session on the discussion of your results. That will be great for you to more understand who done is right or not, what way you have used, and so on. So what do you think about that one? But I have to arrange it with the VVS administration first, if they allow me to get one session after exam. So that's all. I think everything is all right. So we can finish our class for today a little early. No questions so far? And yes, you have 1 week to repeat all the classes, all the chapters. You have 1 week. But actually, you had more than it, because about the exam I told you earlier. Do you remember? 1 or 2 weeks ago, I told you about the exam that you must review all the chapters. But now you already know what we do actually, under what we will concern our assignment, and you can repeat that what I have told you right now. Under which chapter you concerns more. Okay. Okay, thanks a lot. So goodbye. Enjoy your time. Enjoy your weekends. So see you on the exam on the next Friday at 7 o'clock. It will start at 7 evening. Okay. Okay. Goodbye. Thanks. And good luck for you. I hope and I think you must be okay with the exam. You don't worry that when I would have some result, when I do the assessment based on the exam, I won't send all the results to all the students. You won't be able to see each other's results because I will send the results each student to each student. Let's say you will know only your results. You won't be able to see the rest of students, the results of the rest of students. And and after exam on the session, I won't talk about that. Okay, this student have done wrong solution or that one. I won't talk about the names. Okay, you don't worry because this is exam. We won't talk about the names of the students, about the results. I just will talk about the overall mistakes of the students. So the next, some of you asked me about the next session will be start at 7 o'clock by Kabul time, which is will be exam. In that time, we'll send you the assignments on your emails, and you must be able to see uh, to check your mails. Okay. So today is the last chapter, last session. So that's all. I think you're all right already. You do understand clearly, so I can finish class. So that's all. So thanks a lot. So enjoy your time. So I'm already going to finish my recording.